Hi, it's Michael Farr from Farr, Miller, and Washington. Thank you very much for joining me again this week for our weekly video market updates. Stocks on this last day of the quarter are looking pretty good. And really, it's about time. We've been waiting for a little bit of window dressing to try and lift some of these valuations up for quarter end pricing. It's happening, not enough. We're still 10% below that May 20th high above 18,000 for the Dow, still down slightly over 10% from the highs on the S&P as well, so still technically in correction territory. I wrote this week that I thought that there were 4 reasons to be optimistic. Maybe it's time that you all get to hear me being a little bit optimistic about the markets and about stocks. There have been certainly a number of reasons to be concerned. Before I share my 4 with you on video, the 10-year Treasury has rallied a bit further since last week. We are at a yield of 2.05%, so that's higher than last week and a good deal higher than 2 weeks ago. The euro has continued to fall against the dollar at 111 to 112, still in that range. Oil is holding tight at 45.22. Anything below that $45 a barrel level looks to be problematic technically, but for right now we're holding in there. Gold down another $12 an ounce today at $1,116. So I'm not thrilled, as you know, with the landscape that I see in front of us economically. I'm not very pleased with the resignation of Speaker Boehner, because I think that that basically means that a new speaker is going to have even greater difficulties trying to coalesce some sort of consensus among the moderate right and the far right. I think that's going to be a big problem. And if those waters cannot be successfully navigated, I think it brings us closer to a government shutdown. So I'm not commenting on Speaker Boehner's career. I don't make political comments. But if the government shuts down, that's a big economic headwind, and I think that the Fed does absolutely nothing for the balance of the year, and you won't see a hike in December. I have plenty of folks who disagree with me on that, and a couple, including one former Fed governor, who thinks that they will indeed raise at the October meeting. I don't. We'll see. I do have a dollar bet with the former Fed governor. I don't think that markets are ready to crash. I'm a little bit more optimistic. I'm not complacent. I'm watching closely, but asset prices really not in bubble territory. 2 to 2.5% GDP growth looks like it can continue. I know that China's slowing, but I think in the U.S. we're still reasonably sound, 70% driven by the consumer, and the consumer is still driving. The consumer has lower debt levels than they had. Debt's still too high historically, but at least the trend is moving in the right direction. The banking system in the U.S. has been recapitalized since the 2008 crisis and looks very healthy. I think it gives us a great advantage economically over other countries and sectors around the world. So all in all, a little bit of cautious optimism from Michael Farr this week as I look out at quarter end. Stock prices 10% off their highs, a little bit of correction territory. I am cautiously optimistic about the rest of the year. Never going to lose faith in America, and never going to lose faith in the American corporate structure. So hang in there. If you need a little bit of advice, call us. We're happy to help. Don't swing for the fences. And if you crawl out into those thin branches, remember, it can be a pretty long and hard fall. In Washington, D.C., I'm Michael Farr. Thank you for tuning in.